Hi, and welcome to the Trading Bell. Now, East Africa Breweries have just released their full year results. I'll be having a conversation with Jane Karuku, the Group Managing Director, on how they performed and much more. Jane, welcome to the show.
Thank you very much.
It's been some time since you were on the Trading Bell, but we're glad to have you here. And let me start by, first of all, congratulating you for releasing your results. I wanted to ask you to just open the session by giving us a quick brief on what's your immediate feeling of the results?
So thank you very much. So I'm very happy. I'm very proud of Team EABL. I think we've delivered a solid set of results. 1% growth in volume, 13% net sales growth in profit at 10%. And we are giving back to our shareholders a total dividend of 7, a growth, significant growth versus last year when it was 5.5 shillings per share. So very, very happy.
Okay. Excellent. And of course, your shareholders as well are going to be smiling because of the dividends. But one of the key things that we have been seeing is that it's been an interesting macro environment for not just you, but also many other corporates in your field. We are coming from a season where we have seen volatility sometimes in the dollar, volatility in matters, weather and all that. And I know you have not been spared on this. How have you been navigating these particular challenges?
I mean, that's a great question. If I look at the last year, fiscal 24, which we are reporting today, I think every month had a VUCA moment. I mean, I think we started with the drought.
Yes.
We went to the exchange rate.
Yeah. And
then quickly we went to floods. In between, there were global tensions and global supply disruptions. And then we came to some social unrest and other interesting VUCA things within the East African community or East African countries. So really, really, really tough. But as a business, I think I am confident we are well positioned to deal with this VUCA because there's something we cannot change.
Yeah.
We keep receiving these left curveballs. And at the end of the day, it's us as management to know how we work through them or how we organize ourselves so that we can keep making either best out of them or evading some of the very serious bullets and therefore managing our business as we should.
Okay, fair enough. And one of the key things, the last year when we were having conversations on your performance, there was a lot of policy changes and suggestions as well that were really going to affect your operations. And I have seen, even from your conversation today, that you have been really navigating through this. One of the other biggest conversations that was there, and I saw you and other corporates as well presented some of your views, was on the rejected, you're going to use that word, finance need and all of that. How are you navigating the policy changes? Because you seem to be a target.
I think the way I would position that conversation is that it's on tax predictability. For any investor, you want to come into a country or an ecosystem where you can predict where your business will be in 2, 5, even 10-year horizon, because investment is big bucks, it's a lot of money. And I think what we've been trying to have conversations with government is to give us a tax policy that is predictable. And I must say that we've made a lot of progress. We saw, for example, in the last fiscal, beer tax excise increase did take place. And from our results, you can see there's actual growth from that category, which means that the government is going to rake more taxes from us. So I think it's about tax policy being predictable. Yeah. And I think from a regulatory perspective, the country being sort of predictable so that we can confidently get our principals to invest a lot more money in this continent and in this country, because we must, and that's our responsibility.
Okay, excellent. One of the other key things as well that I've seen that sometimes hits your bottom line is when we have this volatility, especially on the exchanges. And I need to ask you what mitigation strategies that you probably employed to ensure that you address the huge surge in foreign exchange losses than we anticipate most of the corporates.
Yeah. I think the first thing to say is that the first half was very different to the second half of this year. So first half was very tough from an exchange rate perspective, and we've seen great improvements in second half. I think for us, it hits us at several places. The first place is at COGS, or cost of goods, because some of our inputs are dollar denominated. So when the exchange rate goes haywire, then we hurt. And then the other one is on exchange rate losses, especially at profit level, and net finance costs. So So we're having a cost challenge with the exchange rate. Is not well contained. When it is yo-yoing quite a bit. So our answer to that is to make sure that we are cost efficiently running the business, and we have a good initiative, we call it productivity internally, and that just implies that everybody in the business has to look at every shilling spent and make sure that it is adding to the growth of the business and not eating the bottom line.
Excellent. Let's talk about matters to do with consumers now, because we have seen, and I think you mentioned and alluded it to at your release of the results, that you're observing consumer trends and demand on the increase. What are you really observing in the market?
I think the consumer is very dynamic, and some not so positive, some very positive. So I think on the positive side is that we are seeing the consumer in this country trying to change the way they are consuming or relating to our brands. So for example, we are seeing people want to drink better, people want to drink more expensive cocktails, people want to drink more flavor, and as our business, an answer to that has been to innovate. So you've seen the recent innovations, the maniatas, bringing tequila, the cocktail culture is to address that change. On premiumization is ensuring that we have exciting brands from Johnny Walker Blues, Singletons, and also premium beers like White Cup Crisp to give our consumers a different sort of flavor and feel to the consumption. We also see moderation. A lot of people don't want to drink a lot; they want to drink less often. So, for example, we have beers near 0 now, 3% White Cup, and that's also growing very, very well. And then lastly, we are seeing we are global citizens, so we see trends that are occurring across the world. So the tequila culture is here right now, just like we saw gin culture a few months ago, like I think in F23.
Okay.
Yeah.
All right. As Group MD, definitely you look at all your subsidiaries across the East Africa place that you are working in. And I wanted to ask you, what's your really overview when you look at all your subsidiaries? Do you have a comment that you can make on them?
So I think all we are looking for as we go forward from the subsidiaries is top-line growth. And that top-line growth will be delivered by all of us really understanding how the consumer is moving. Some will be premiumization that I've talked about. Some will be a depressed consumer who's looking for more affordable products. And then there's some other things that are common, which is like productivity I've talked about, cost of doing business or productivity. But most importantly is route to market execution to make sure that we are available all the time. We also are very proud about our ESG agenda because, as you know, we are 100 years old in this continent, and we want to make sure that the next 100 years we are also surviving for the next generations. But I would also call out people. I think we have a group of really dedicated, high-performing culture in the organization, and that's why we're able to navigate these very tough curveballs, whether it's consumer being depressed, whether it's competition, or whether it's any VUCA thing that may hit us.
Just zeroing in on the subsidiary Kenya itself, since we are here in Kenya, I wanted to ask you, because I noticed there's a huge rise in terms of sales. What is this driving sales in Kenya?
I think I would say is many things. I think the first thing is when you understand the consumer, then you're able to offer them what they are willing to spend on. I think it's as simple as that. And the second one is making sure that when they want to spend, you understand what they want and where they are consuming specifically, so you're available all the time when they need you, or when they must purchase, or when they want to purchase. And then the other one is we are very digitally enabled, so giving you access to, for example, digital gizmos, I call them, that you can order from wherever you are, and that brand can then be delivered to you within 20 minutes. So we have the bar platform, which is quite good.
In fact, I just put it to you to elaborate more on that. I think in previous conversations, you kept mentioning that you really want to leverage on the digital ways of selling. And now you're seeing the fruits of it with the bar. What's the onset? What are you seeing even as you're ongoing? Are sales more going towards this digital innovation?
Yes, I think digital sales will continue growing. Traditionally, people used to go and relate with our brands in the bar, or maybe buy from a supermarket to take home. But now we are having emerging third, fourth spaces where people can get together as friends and want to enjoy it together. So then they order via the digital platform called the bar. So I think that will continue growing because more accessible and more convenient to buy and easily available.
All right. As we come to the tail end of the conversation, I just wanted to also get your thoughts on the pricing strategy. And I wanted to ask you, what's the forward pricing strategy in line with the observed demand trends? What are you conversing on?
I think I can't really talk about the forward pricing strategy. That would be giving too much away to my competitors. But I think what I can promise is that we'll continue giving value to our customers.
Okay.
Yeah.
Value to your customers.
Yes.
I love this. Are you in any way, of course, sometimes you talk a lot about the headwinds that you're facing, but what about the tailwinds as well? Are there some positives that you're seeing? Maybe the rains, do you see some things happening that will probably make your consumers probably happy with lower prices?
Yes, we certainly do get tailwinds. I mean, certainly food availability. We've had a lot of rain in the last 12 months, which means that food is really available. And we've actually seen inflation across the three markets dropping, which is good. I think it's very, very low right now in Uganda and Tanzania, and even in Kenya. It's below 5% across the region. I think economic growth as a region, East Africa is still growing between 5 and 6%. That is a tailwind, and that's good. And like we talked about Forex, if Forex continues to be low and contained, it's a sort of tailwind because our cost of doing business will be lower.
Okay. And finally, just zeroing in still on your latest Ruaraka brewery, how is it doing?
Microbrewery is very exciting. I think we invited you last time. It's very good. It's enabling us deliver at speed innovations. So we can deliver an innovation in 3 months or less. Because we have access to the microbrewery and we also have access to consumers. So we can bring in there and just understand what they're looking for much better. Yeah.
I want to, first of all, take the moment to as well congratulate you on your recent election as the board chair for the Kenya Association of Manufacturers. Shall we have a conversation soon on that?
Yes, thank you very much. We shall. Yeah.
Thank you so much for your time.
Thank you very much.
Excellent.
Okay.
There you have it. That's Jane Karuku, the Group Managing Director, East Africa Breweries. They have just released their full year results and really very optimistic on the future and for you, the consumers as well. And of course, a good word for you, the shareholder. Welcome back to the Trading Bell. How has the derivatives market been performing? I'm joined by the derivatives manager, Justus Ogalo, to help us understand. They recently just made a huge announcement of how the market has been doing. Justus, thank you so much for joining me on the show.
Thank you for having me.
100 million MAC, you have crossed that. Yes. Congratulations first.
Thank you very much.
And I just wanted to get a feel of, is this the time you say that, yes, now we have arrived and the market has taken off? Well, it's been a journey of 5 years.
Yeah.
How has it been so far?
Well, it's been a tough journey getting the market going. We started in 2019 with a small handful of securities. We've since been able to grow that to just about 10 securities. And we've seen a bit more activity, especially from the retail investors who really account for most of the activity we are seeing in the market. A lot of them are seeing the value in being able to trade in our market and also capitalize on the returns that they are seeing from the volatility in the equities market.
It's actually very interesting that you mentioned the retail market. I think there's a very keen focus on saying that the people who revolutionize this market is the retail. But looking at the equities, since the beginning of the year all the way down now, we have seen quite some significant change in terms of good performance. And looks like the tide has not left you behind as well. I don't know what you deduce from this now. Looking at the retail market that you've seen that have really moved this. What are you looking at? What have you deduced out of it? And is this the rocket inside? Are we about to hit more millions?
Yes. Well, the thing about products like derivatives is they really capitalize on volatility in the market. So as we are seeing the volatility in the equities market, We've had a very good performance in the first half of this year, being quoted as one of the best exchanges in the region.
Yeah.
And because of that, it creates a lot more opportunity within the derivative space for investors to be able to capitalize on that. One thing we've seen is retailers have quite a healthy risk appetite, which means they can be able to come in and out of markets as in an agile manner as compared to larger or institutional investors.
Yeah.
We've seen the same happening in different products across the market where we can see that the retail investors have a very nice risk appetite, and the nature of derivatives allows them to take riskier positions as opposed to traditional investments such as equities investments or bonds or cash deposits.
There are markets that boast big time, especially when it comes to the derivatives market. And I don't know, when you look at us here in Africa, of course, us being top this year, are you seeing a stage where this is the time now where we will see the level of understanding, if we may call that, of derivatives? There was a lot of sentiments when it started that what are these, all those kind of things.
Yes.
But it seems like the knowledge has passed down to the investor. By the way, how would you gauge that?
Well, it's been actually quite a lot of effort into getting the investor education and getting the information out there.
Yeah.
We have tried to do that through the various different channels.
Yeah.
We do communicate the concept of derivatives through some of our social media platforms.
Yeah.
We've been able to increase the information that is available through our website.
Yeah.
We've also been engaging with different learning institutions, such as universities, to be able to get that knowledge out directly to the consumers and to potential investors within the market. So it's really just about creating more and more awareness and teaching and investor education on how to consume the product, how to trade, and also how to trade effectively.
Thank you so much, Justus, for that. I want us to also help the viewers who probably will be saying, okay, what is all this? What have I been missing this boat? And I know we have spoken before about understanding derivatives, and we could as well go back to, as you have said, asking viewers to go back to their social media to learn. But just in a quick nutshell, a markets 101 kind of thing. What are these derivatives and how do I get started? Even the first time, this is my first time really hearing you talking about this. Yes.
So the derivative really allows you to be able to invest in some of the listed securities we have, as well as the indices. Without actually owning the underlying share. So what we've seen is some investors are not too keen on attending AGMs or voting at the AGMs or collecting on dividends. They really just want to be able to gauge the price within the market and capitalize on that. Derivatives allow us, unlike equities, to capitalize on upward movements in the price and downward movements in the price. So that way you can be able to play on either side of the market, as opposed to traditional investments where your asset value, your asset can only increase in value. However, if it decreases in value, then you have no opportunities to capitalize on that. So the derivatives allow us to play on both sides of the market.
Okay. I'm going to throw in another jargon that you normally use in that market. You talk about risk, you talk about hedging, and that this is a market that will cushion the investor.
Yes.
Could you elucidate that a little?
If I own some of the stocks that are available in the exchange, and the prices of these shares are coming down, if I was able to take what we call a short position on the derivatives market, the gains that I'd make on the short would cancel out the losses that I've made on owning the underlying share, which means as an investor, I am neutral. And that allows me to focus on different investment strategies, such as capitalizing on dividend yields, which is really the return you earn from collecting on the dividends. So it allows you to be neutral about different prices in the market, irregardless of the movements in the market.
Okay. Now, thank you so much, Justus. You know, you've spoken a lot about the retail investors, and I wanted to know the composition. Is it actually local based? And maybe you could also touch on, because I recently attended a conference on the pensioners in the country, and they were also having discussions about trying to diversify their investments. Are they considering derivatives? Have you seen them coming in? Are they asking the questions? Please.
Yes, so we've engaged quite a bit with the institutional investors. Currently, the market composition is almost 100% retail. So they have seen the opportunities. With the institutional investors, it has been a slow start. However, we've been engaging very actively with them. And one thing we've seen is that there's a big appetite to be able to hedge their equities portfolios. A lot of them have had a challenge where across their portfolio, the equities portion has had quite a tough year or two, which at the end affects the returns that pension investors are able to earn. So by creating different products that we have made available to the pension space, then we will be able to see a lot better returns of pension investments, as pension funds are able to hedge against the risks associated with the equity investments.
Okay. All right, Justus, thank you so much for your time. And as we conclude, everybody would want to know what's the sustainability of this for my investment and everything else. So what is your prediction for the future of the derivatives market?
It's nice that you brought up a future, no pun intended. But I think the next step is really creating more awareness, because the more people are aware of the product, then the more they're able to see the value that they can get from trading in derivatives. The other assurance is that the derivatives is fully regulated by the Capital Markets Authority. And to be able to begin, an investor can be able to visit the Capital Markets Authority website and look at the list of licensed trading participants who would be able to help them with that investment journey. We are also looking to introduce a string of new interesting products that would be able to cater from to both the retail and institutional investors to be able to maximize on their investments within the capital markets.
All right. Thank you so much, Justus, for your time. But just before you leave, up next is Markets 101. Let's get a lesson. So in Markets 101, we want to teach you, how do you get started to start trading on derivatives? Justus, take us through that quick one. How do we get started?
So to get started, you just visit your stockbroker and open a derivatives trading account, which is different from a CDS account. Once you've been able to fund the account, then your broker would be able to provide you access to the trading platform through which you can be able to place your buy or sell orders. They would also be able to provide you with access to their research, which would allow you to be able to make an informed decision about which counters or which securities you'd like to trade, and also how to be able to interact with that system.
Okay, so there you have it. Markets 101, you've gotten to learn. It's as easy as going right there. By the way, so you have said that my CDSC account does not work on the derivatives. I need to open a new one, right?
Yes.
Excellent. So there you have it, and I hope you have gotten something today on how to get into the market. Now, moving on, we want to answer your questions. And one of the questions that we got on the social media, and thank you so much for your feedback, by the way, is what are the advantages really of trading on the derivatives market? And I know there could be many, but just as how would you answer that into top 1 or 2 advantages?
So the derivatives allow you to be able to invest in shares at a fraction of the cost. So what it would cost you to buy 1,000 shares of a telecommunications company, you'd be able to invest at a much lower entry point. Similarly, the returns that you'd expect from owning the underlying shares are still what you'd be able to gain from having the derivative. So the returns are similar to owning the shares, however, only at a fraction of the cost. However, that's really what brings in the risk element of trading.
Okay.
All
right, there you have it. Quite something, but do not worry. I mean, the NSC is going to put together and has been putting together a lot of education materials here and there are some training courses as well that you can check it out on, so that at least you can get to learn more about derivatives, how to trade about it, and do not be afraid of asking the question. Your feedback is what matters to us, and we are able to really know what you really want to get so that you can be really trading profitably. So thank you so much for your time. That's it from here. I'll be on with the markets.